The shift in economic power to Asia is one of the most significant economic developments to affect the world economy in decades. European multinationals and SMEs have been in China for years, and the two continents have become trading partners. However, Chinese investment in Europe has received little attention. Today, China is driving the global economy, and it has already overtaken both Germany and Japan in terms of GDP. It is also the largest global exporter of goods and capital, and the largest consumer of raw materials. China holds 1/3 of global foreign exchange reserves, is home to 2 of the world's 10 largest banks, and in 2013 had 89 companies on the Fortune Global 500 list. China ranks first or second in the world for all the main economic indicators, except FDI. And yet, China ranks only 13th in the world as a foreign investor, with a total share of 2.1%, far removed from its 11% share of the global GDP for goods exports. China's growth remains quite close to 8% and is forecast to level off at about 7.5%, following the roadmap laid out by the 12th Five-Year Plan from 2011 to 2015, which has made the globalization of Chinese companies a priority. Is the European Union a priority destination for Chinese multinationals? The European Union's domestic market is the largest in the world in terms of purchasing power, consisting of 501 million people with a GDP per capita of $34,500. Moreover, the EU27 region continues to be the world's top FDI destination. However, with just 5.8% of all Chinese investment, the EU does not appear to be a high priority destination for Chinese companies. In 2011, Chinese investment in Europe started increasing very rapidly. Besides Luxembourg, the main destinations for Chinese investment in Europe are France, the United Kingdom and Germany. Spain is the 9th largest European recipient of Chinese investment. China's largest bank, the Industrial and Commercial Bank of China, ICBC, has a presence in Spain. What impact has Chinese investment had on Europe? It has created 50,000 jobs, still a limited number compared with the 4 million jobs created by American companies. It has allowed the recapitalization of resident companies and the reorganization of troubled companies. It has increased the production capacity and internationalization of resident companies. It has also increased competitive capacity. Lenovo and Haier have developed products with high standards of quality and prices that are highly competitive in Europe. For China, what is the role of Spain in the European Union? Spain is only the 9th largest recipient of FDI in Europe and the 4th most popular destination for greenfield projects. However, this trend is rapidly changing. The ESADE China Europe Observatory has identified 60 Chinese companies with a presence in Spain. Most of these companies operate in technology-intensive sectors and at the high end of the value chain. What prompts Chinese companies to invest in Spain? The main reasons include access to consumers, the ability to enter new markets, and the search for strategic resources and efficiency. Brand recognition and an understanding of the local market are the main challenges faced by Chinese companies in Spain. What are Spain's prospects? China is interested in strategic companies partly owned by the public sector. There is also interest in investing in Spain's food and agriculture sector. Real estate groups are interested in the price trends in the sector and the possibility of buying and selling properties. The know-how of Spanish companies is complemented by the financial resources of Chinese companies in sectors such as ICTs, biotechnology, energy and infrastructure. Spain has a market of 47 million people, an extensive infrastructure network, a competitive tax system and a good quality of life. Global Chinese companies are quickly emerging, and these companies will increasingly be privately owned. We need to know and interact with this new global player because it will have a fundamental role in the development of the world economy in the coming years.